Good morning, everybody, and welcome to the True Potential Do More with Your Money podcast. It's episode 20. It's the 5th of June. I'm Daniel Harrison, Chief Executive. You may notice today I'm back in the office. We have board meetings yesterday and today, so I've came into site too. Greg here has kindly let me in, so welcome, Greg. It's going to seem strange. I've got my screen here to see Jeff, Jamie, and Dianne, and then Greg like that. So it's odd doing a podcast with a person again. So welcome, Greg. Jamie, welcome back. Dianne, welcome back.
Thank you.
Welcome yet again. That's 2 weeks for yourself. 3 weeks for me where I've hidden away. The audience have been after me. They've been wanting me back. Here I am. So thanks everybody for joining us today. Thanks everybody on the panel as well for taking the time out. As per it being the first week of the month, we are going to run our questions and answers panel today. We've had stacks of questions in about the investment side of things, but also about what True Potential are doing, and then a few thoughts on lockdown and the government's approach and what things could look like as we move out of it. So, thank you, everybody, for the scores of questions. What I'm going to do, I won't be saying people's names today for the questions because we've had so many. What we've had to do is merge 2 or 3 into separate questions. But thank you in advance for sending those through. Before we get into those, though, Jeff, I just think it could be handy. I know that you and the investment management team spent a good podcast just last week talking about May and talking about markets themselves, but we're obviously 1 week into June now. Would you mind just giving us a bit of an update about how things have looked this week, please, Jeff?
Yeah, certainly. I suppose the key thing this week is that yesterday marked 50 days from the low of the market, so 50 trading days from the low of the market on the 23rd of March. So, like we touched on last week, we continue to see an improvement in asset markets, so both equity and bond markets through May. And then as we move into this week, I think the key thing that we were focusing on and were thinking about was what would happen within Europe and in particularly the Eurozone around the ECB announcement yesterday. And what did we get from that? Well, I think we got something that is pretty positive from the market's perspective. We saw an increase in the size and scale of the ECB's bond purchasing programme, so their quantitative easing, increasing from 750 billion euros to some 1.35 trillion euros. So 80% expansion in that. That gives them a lot of firepower to buy both sovereign and corporate bonds over the coming months. And again, the scheme was extended through to the end of June 2021. That then brings us to start and focus around what's going to happen in the EU next. And we have got the EU leaders discussion at the end of the month, where we will get detail on the fiscal support package. So a lot of positivity around Europe. That's been evident in European asset markets, with equities performing well, the euro in one of its strongest runs that we've seen for a number of months and even years relative to the dollar. And I think the other thing, we've continued to see sterling do well. So if we go back to where sterling hit its low in about the 17th, 18th of March at 115 to the dollar. It traded through 126 to the dollar yesterday. So despite the Brexit challenges in the background, sterling has been doing well. And then today we'll get an update on the unemployment trends in the US, which is probably likely to show that we had an unemployment rate of some 18 to 20% for last month. But the other side of that is that we had the continuing claims number yesterday, and we had a lower number again. So that does indicate that there's some stability in the employment situation in the US, and if not, some improvement from where we've been. And then just one other thing we touched on last week in the podcast, that we'd be looking at some of the Chinese PMI data over the course of this week. And that did show ongoing improvement in the Chinese domestic economy, both from a manufacturing and from a services basis. The only challenge that they continue to face there is the export side of things is weak, for the obvious reasons that the vast majority of economies are just coming out of lockdown. So exports are the challenging aspect of that recovery for China so far.
Thank you, Jeff. It's certainly been heartening to see the some stabilisation going on, as you mentioned, the US job side of things stabilising. FTSE says kind of found its floor, what we hope now, in the 6,000s, and it's had a bit of a steady climb over the last couple of years as well. And I suppose I remember probably the last time you and I were on a podcast together, which was probably 4 weeks ago or so now, and we were talking about when do we think extreme volatility might end, because it's not good, either these huge spikes up or indeed down as well. So I think there's a question about volatility a little bit later. There is, so I'll leave that one parked for the time being, please, Jeff.
Okay.
But certainly from a personal, from a selfish point of view, it's been good to see some stability come in, some predictability.
Yeah.
So as we move away just from the broader economic update, we'll have a look at some of the questions we've got. And really what I've done, Dianne and gentlemen, is I've broke our questions into 3 categories today, really. First is going to be a true potential related set of questions and answers. Then we'll move on to the markets. And then finally, we'll do a general set of Q&A as well, but probably the broader macro and political environment out there. So first one, really, there's been a range of questions just asking about how True Potential has coped in May. I think I spoke at the beginning of May or the end of April about how we'd done in April, which was a great month for us. I think it was our 5th best month in terms of overall results, and delighted to say that May was very much the same for us. Our sales pretty much played a draw with April, which is a good result, by the way, because as I mentioned, April was our 5th best ever month for sales. So to play a draw with that can't be understated how valuable that is for us. In terms of our turnover, very strong as well. In terms of our profit, we actually had our best ever profit, although they're unaudited figures so far. It looks very strong. That's been driven by a couple of things, and Greg, I'll talk about some of the savings which we've made with our Site 2 work a little bit later today, but some of that's helped with our savings and some of that's helped with our efficiency as well. But really, if we ally how well True Potential's been done, some of that, or a lot of that, is in part down to the work which we get with our financial advisors. What have they been saying? Have they enjoyed a good May as well?
Yeah, absolutely, Dan, and hello everybody. The advisor community, obviously, I think initially went into shock, really, and kind of how do I deal and how do I continue to do my job, because they're predominantly used to go and visiting clients in their homes, and probably the biggest change for most of them would have been technology. Early doors, we hosted a number of sessions using the technology we're using today to train and educate advisors using the likes of Skype, GoToMeeting, to name a few, and they've really kind of started embracing it, and they've really took that on. If we look at how we've supported our advisors in return, is we actually had a record month for statistics. So I normally come on these podcasts and at least get a couple of stats in there just to bore everybody, really. But we had our record month for support numbers, so over 10,000 advisor contacts in May. Majority of those were over the telephone, which is good because it's always nice to talk to a human at the other end. And the average call time we got down to 9 seconds, which is great. And our longest wait, when we analysed it, the longest wait was 3.5 minutes. So for me this month, I've rang a lot of last month, I've rang a lot of other companies, and I've spent a long time on hold. And then when you get through to somebody, they're either temporary or brand new in the role. We've got a team of 14 members of staff who've done those 10,000 interactions. So for me, that's really been a good test for us at our end for business as usual. But it's actually great that the advisors are still working, they're still going, they're still at it. And obviously that was reciprocated in our sales numbers and obviously the number of questions, queries and things that we're getting. Another big one, obviously this is testament to Dianne and the work that her team's done, but our advisors as well are very excited for the new back office system that we're imminently launching. So since going into lockdown, it seems like the deadline's been brought forward, actually, if anything, in the launch of our new advisor software. So not just from a client perspective where we give new technology, but also launching the new software that's got a lot of our advisors excited and motivated and really keen to get that launch, and that will hopefully be in the next few weeks.
Great. That's going to be the VNext system.
That's VNext, yeah, absolutely.
Good. And so Greg's mentioned about the support we've been given to advisors, and Jamie, I know that you and Rebecca Wright have been making some updates to the client advice team, the central advice team, in terms of hours and in terms of the types of support which we've made available there. So maybe you could just update the audience with the updated or the extended hours which we're currently trialing.
Yes, Dan, we've been in lockdown. We wanted to sort of assess whether it was we could open a little bit earlier on a morning, so from 7 a.m. and try and catch people before work if they had any queries. So our advice team now, Monday to Friday, is working 7 a.m. In the morning, so we can book in meetings there. But that's the same as the customer care team, which is a trial period that we're looking at now. And if it works, and if we get enough interest, we'll continue that, because it effectively extends them hours that we can speak to clients, which we're happy to do. Also looking at Saturdays as well, Saturday mornings, where we'll open up the support team and the facility to book meetings with advisors, just to see if that's an option for clients. We know many people work Monday to Friday. Can we open our operating hours just to help and make it easier for people to access us and ask us for questions? And then that extended one, as you know, we've got, I think if anyone's seen the recent working at home videos, we've got someone working in New Zealand for us at the minute. So actually a lot of your secure messages, the clients are getting replied to at 2-3 in the morning, 2-3 in the morning UK time, but I can assure you Amy over in New Zealand is working a normal shift for us. But actually, that's been really beneficial. It's been beneficial for us, Dan. For us, for being able to ensure that when we come in the morning, the clients that maybe have wrote messages at 9-10 o'clock at night, which will happen because people have busy jobs during the day, we can ensure that we answer them queries in a really speedy manner for them. So it's been pretty good.
Thanks, Jamie. I'm just going to park that idea of clients being able to access things just for a minute, Dianne, because I want to jump across to you when we get onto there with the new technology. But Jeff, just to finish wrapping up some of the highlights in May, were there any particular highlights in the portfolios, any worth mentioning to the audience today?
I think the thing that was pleasing about the portfolios in May was they delivered as per our expectations. So clients come in and they're risk mapped to a particular category of portfolio. The portfolios delivered in terms of the objectives that we would have expected, in terms of the volatility that you've touched on and how that's declined, but also in terms of the return. I think the other thing is probably around our managers continuing to be very proactive and looking to take advantage of any opportunities that they were seeing in the market. So a number of new positions that came into the portfolios and have subsequently performed well. So to see our managers doing what we want them to do, and then also to see our portfolios behaving in the manner that they should, I think really speaks to the robust process that we've got in place, how we engage with the managers, how we use that to find the information, and then how we ultimately tilt the portfolios to take advantage of those managers that are exploiting some of the trends that we've been seeing. And I suppose one of the key trends that we've been seeing and we've been wanting to exploit in the portfolios is within credit, and particularly within investment grade credit, where we've seen the Fed in the US active in the market, providing liquidity into that, and that's been supportive. So we've seen investment grade spreads narrow relative to sovereigns, and that, what does that mean? It means the prices went up, and we've been able to participate in that with the portfolios.
Thanks, Jeff. And I know when I was writing my end of month notes just on Sunday night, you kindly provided some statistics, and I think the balanced portfolio, I think if we look at its low point, which was March the 23rd, I think it was, Jeff, through to probably Friday night when you give me the data, maybe I think it was up over 15% over that period as well. So that was particularly exciting for me, because that's one of the things I'm invested in as well. And I'd listened to some of the advice given by the team about buying cheaper units when the market's down, taking advantage of it. I was fortunate enough to have enough money to put in my ISA at tax year start, so obviously 5th, 6th of April. So really I'd seen advantage of that. And I know a little bit later on today, there's there's a question for Jamie and Dianne about how to invest on the go with impulse saves and direct debits and things like that. So maybe we can talk a bit about buying units at a discount and taking advantage of uplifts like that. And
I suppose, Dan, that's the thing, that whilst we don't do that, what we want is our managers to be doing that. And they're obviously they're not buying units, but they're buying assets.
Yeah.
And they're buying those assets at a lower value than they have been historically. So taking advantage of that within the portfolios is what we want to see our managers doing, in the same way as the opportunity is there for any of our investors to do the same on the other side.
Yeah, I mean, that's a good point, actually, Jeff, and probably one I should have mentioned before, because when I was talking about company performance and I was talking about sales coming into true potential, one of the reasons I talk about that, ladies and gentlemen, is because of those new flows of cash, which Jeff and the team can then allocate to the fund managers, is great, because they can use that extra money, that extra buying power, to take advantage of these opportunities, to buy more assets, to look for the new opportunities within there. So instead of just like ticking along and not adding any new money in the market, true potential, we're adding new money month on month, which is so powerful. It really means we can take advantage of opportunities. We're not having to sell units, we're not having to sell assets to replace. We've got that new money to continue to buy, not replace from there. Dianne, you've been waiting on the sub bench for a little while there.
Just patiently sat here.
Yes.
Nodding in all the right places.
Well, I've jumped ahead to different questions, so it's my own fault. I had everything neatly laid out, but in true potential fashion, of course, that's all gone
out the window.
But the next question we had was, what are true potential doing for clients with technology at the moment? I think Greg's mentioned a little bit about VNext, which is our client, our advisor-led technology. But I know there's been a lot of work behind the scenes in terms of our mobile apps and the client sites and things. So maybe you could give a bit of a teaser to some of that, Dianne.
Yeah. So like Greg mentioned, we have a range of client bases, one of them being the advisor base, where we spent a big portion of our time developing the solution that the advisors use, because while in part it was a bit of an upgrade that everybody expects from time to time, we also try to deliver features to the advisors that they've requested, things that matter to them that we wouldn't necessarily think about because we're not doing their job all day, every day. So we've managed to get the page speeds down to, I think 75% are now being returned within a second. And yes, don't worry, I will be having words about the other 25% that aren't within that 1 second. But yeah, things like providing the advisors with crystallised and uncrystallised portions of clients' pension, giving them a bigger document upload limit, simple things like that, like I say, will make a huge difference to their working day. And then what we take from them also is the feedback that they either get from their clients or the clients that come direct to us. So what we've recently done is we've enabled push notifications on the mobile apps. And that is I think on one of the previous podcasts that being clients had said it was nice, it was refreshing to hear that there was some good news in the markets, that it hadn't all been doom and gloom. But when you listen to the media, the markets are down, don't do this. It's all very, very bad news. And I think what we did is we enabled push notifications on the apps to drive clients to genuine facts as opposed to propaganda, because somebody wants you to believe in something. So yeah, we've enabled push notifications. Like I say, we'll drive them to either certain articles or media pages that will provide them with factual information. But we're also at the minute developing part of the app that will allow them to further enhance their own financial understanding, if that makes sense. I don't want to give too much away, but in light of recent permissions and things that have gone on with the FCA and what application providers can do, we have applied, we've got those permissions, and we will now be opening up a range of items within the client's mobile apps to give them the ability to harness all of their finances in one place, as opposed to true potential here, everything else somewhere else, or in a multitude of apps.
Yeah, I think it makes a lot of sense, Dianne. I mean, I can't remember the exact number, but the bit of research shows clients typically only use 2 or 3 apps in total. As I say, apologies, I can't remember the exact figure. So some of our thinking there is, instead of having a separate app for your banking and one for your investments and then one for what have you, if we can make True Potential the app for all things financial, then our clients don't need to flit around apps. They don't need to remember multiple passwords and what have you. They can log into True Potential. They can look at their investment performance. They can read the commentary from Jeff and the team. They can check their banking. They can check their credit cards. But then also they can interact with their products as well. And Jamie, I know something that the tech team have been doing with you and the pensions team is the online drawdown system. Is that live now for clients?
Yes, it is, Dan. So for us, there's two options for clients if you want to take income out of your pension. Obviously, you can go through an advisor and they can set that up and assess, the best place to take the product. But if you actually, you just want to go online and take some income out of your pension, you can now do that, via the website, where it used to be a phone call for us. So it's a lot smoother for our point of view. And we've been trialing that for the last couple of months. So selected clients have been using it, and that's now fully live for clients. It's been very well received.
Brilliant. Again, I think it's the second time I've said this today, but selfishly, if I put myself in the shoes of a consumer, it just makes a lot of sense to be able to go online and help yourself rather than sitting on a telephone with you. I know we've got a wonderful telephone team. We really do. I love them to bits. Obviously, available almost 24 hours now, as you're saying as well, Jamie, with your worldwide coverage. But I'd much rather go into my app or go into the website and just fill the form in and help myself rather than sit on the phone to do such a task. So very welcomed. And I know that to maybe to some of our audience out there, they probably think it's, why are you getting excited about being able to fill a pension form in? From a user experience point of view, walking that fine line between keeping it easy for our clients to do, but also using the regulation. Yes. It's been darn tricky. So it's a great bit of work between you, Jamie, and Dianne with the tech team there.
I think, Dan, as well, to comment on it, you just look at some other providers will force you to use an advisor to do this.
Yeah.
So, and I've had personal experience with helping clients on this, and it can take weeks, for something which should be pretty relatively simple. And yes, there is compliance and the regulatory reasons behind things that you have to do. Yeah. But this is a huge leap forward for us in terms of making it just a little bit simpler for clients in terms of having that access.
Good. Thanks, Jamie. And I mentioned through the apps and through the websites, we can also get a lot of the communication available from True Potential. I know, say, if everyone hopefully watches Jeff and the team do the daily morning markets, and if we just look at May in terms of output from there, the True Potential team produced 92 videos on YouTube and on Facebook. I think, Jeff, you were in 90 of them. So your voice is still going strong through this lockdown period, Jeff.
Well, there's going to be a little bit of a change. We've got a few days off next week, so a couple of the team are going to step into the breach. So new faces and new voices for everybody next week.
So, well, talking about new face, he's not a new face, but a different face to you would be Chris Leyland, who did his work from home video this week,
yes.
Jeff.
Yeah, indeed. I've seen it, yes. His cooking is it seems to be getting a lot of comments on Facebook as well from advisors and from his friends. So, yeah, past the specialities.
I think the one comment that I heard from Chris was Chris said he made everything from scratch. I think he was so excited. He said, "I've made it from scratch about 6 times in a row." We all know Chris well. Do we think Chris made his pasta from scratch? Or?
No chance.
No, Jeff, no. Greg, that's a no. Jamie?
Definitely not.
Definitely not. Dianne?
I think if somebody has to say that 6 times, then they doth protest too much.
And Jeff, Chris reports to you, so.
Yeah, so we've had a bit of an analysis into the pasta making situation. So what Chris is saying about that is that, well, if you can get it, fresh pasta sheets are the best to use. And then he does have a preferred supermarket, which I'll not mention on this as to where he would normally buy them from. So unfortunately, no, it's not made from scratch.
It's a bit like Dianne with her 75% of fast pages. So
Yes.
Chris has made a 75% lasagna from scratch. Right, good. Well, it's good to make. I'll just make a note of that. Future reference from there. Last bit of technology, really. Dianne, is probably one for you to talk about, but then Jeff and Jamie, if you want to jump in as well. I mean, over the last 2 months, really, we've seen close to £30 million be invested via Impulse Save, which is record amounts, like hugely record amounts. And that's, for those who don't know, for those who don't use Impulse Save, Dianne, could you just give people a bit of background about what it is and how people use it?
Absolutely, it's a payment process that's linked to your True Potential policy. So you can go into your client website or via your mobile app, choose the policy that you want to invest in, and the system will simply ask you for either your card payment details, or if they're already stored, if you've previously done it, you can choose an amount. The system will say, is that the amount that you want to confirm? It'll then tell you how close to your goal that small or big amount will get you. And then it will simply deduct that amount from your bank account, and it will invest it into the funds that you're invested in within the account that you've chosen. It couldn't be any more simple. I don't think it's just like making an online purchase, but you're purchasing units in your policy with True Potential instead of anything else that you might go online and buy.
Yeah. And Jeff and Jamie, I know it's not advice time, so don't worry, I'm not going to get you pinned, the compliance gods. But Jamie, when you're dealing with clients direct, is there a reason why you think people are impulse saving more at the moment? Is there any advice clients are telling you?
I think it's simple for them, Dan. If you've got especially at the minute, if you've got that little bit extra, it's obviously different for certain people, but if you've got a little bit extra cash because you haven't been spending as much in the last sort of few months, when clients are calling in, just guiding them to say, actually, if you want, you can just click this button, put the money directly in investments. You don't have to, if you don't want to, you don't have to go through a full advice process. It's just really, really simple. And actually, it gets you in the market a lot more quickly. So I think for us, once you show clients how to do it once, we very rarely hear from them again, but we see them regularly doing it. As it's just that simplicity of it, it's really worked well for us. I think as well, Dan, what I would say is you've got Impulse Save, but as well the direct debit side of thing, the regular contribution side of thing is also as equally as important. I personally found I up my direct debit amount in February. I actually set up an ISA for my wife to get her to understand the apps, etc. But actually, that's by doing that and put that extra little bit in, I'm pretty much back to normal of where I was after the market drop, because I was constantly putting that money in and buying them sort of cheaper units, which Jeff will be able to explain a little bit about.
Yeah, I think those two things really come together quite nicely, the direct debit and the Impulse Save, because ultimately what are we wanting people to do? We're wanting people to invest for their longer term goals and to be able to achieve those. And one of the key things that we all are very familiar around is point cost averaging, effectively that very concept of trying to buy those units at different prices. And by doing that on a very regular basis, it allows that to be achieved. So yes, with the direct debit initiative, that is great, as Jamie says, and that really gives that discipline to doing that investment. But then taking advantage of one of the points that we've been discussing over many times is just volatility, and you can impulse save if you see that option there to do so. So using both of those things from a technology point allows our clients to achieve their longer term goals more effectively. And I think that's the key point, that it's innovation that's allowing that to be achieved and allowing clients to meet those longer term goals.
I think for me as well, it might seem counterintuitive to people. So the market crashes. What do? You don't pause. You're effectively buying at the point of a sale. So where people would be looking for the sale of goods, they can go into their apps, they can buy units at a cheaper price that will then increase their worth when markets do start to rally again. And I think, yeah, Dan, the enormous amounts we've had in through Impulse Save over the past few months are testament to the fact that clients are doing that. They are using the technology, and hopefully they're taking the messages away from these podcasts, which is don't be scared. Use the technology because it is simple to invest when it's best for you.
Well, it's an interesting point about the sales side of things. I had a different webinar with Earl Glasgow, who I know was on this podcast 2 or 3 weeks ago now. And Earl was talking about his wife, Anne. He's always talking about Anne buying things online.
Yes, he is.
With you, Jamie, on that Functions podcast.
Yeah, sorry.
He just said, if you saw something online for 20-25% off, discounted, which is where units were, a couple of months ago now, you'd buy it. If it was a nice set of jeans or a nice set of chinos, then you'd certainly get them for 25. You'd buy them online at 25% discount. And people should think about their financial affairs in the same sort of way, that you're getting something which you need, which is a longer term or medium term savings vehicle, be it a pension, be it an ISA or something. So you should buy it at a discount and take advantage of that. So it's good to hear about these levels of impulse saves and about the direct debits. And Dianne, just a sense check, you can set a direct debit up online as well?
Absolutely, yeah. It's no more complicated than doing an impulse save. There's a button there that will allow you to create a direct debit against the account that you want it to go into, and there'll be an online direct debit mandate for you to set up. You'd go through that process, put your details in, click submit, and then we still have the standard 10 days in setting up the direct debit process.
Yeah.
But yes, if you're within 10 days of your chosen direct debit date, it will come out the next time that it's due. Yeah.
And by the way, that's not a bad thing, because we shouldn't be trying to time the market. By the way, you shouldn't be trying to get your direct debit to fire or something. So it's about setting something up for that longer term habit.
Yeah.
We'll jump across to part two, really, which are some more kind of investment related questions. And Jamie and Greg, I'll bring the two of you in. Jamie, I'll kick off with you. We had a question which was, with interest rates being cut over the last couple of months, so they're at a record low, obviously. That means limited returns on cash products being offered. How would the panel recommend I invest my money at the moment? So I don't know, Jamie and maybe Jeff, you could talk about some of the products within there, and then Greg, you could maybe talk about some of the technology we've got to help clients, if they're already in cash products, move it across.
Yeah, I think, Dan, if you're in like say cash ISAs, funny enough, I've just helped a friend move his. He's in a cash ISA getting, I think it was something silly. It was 0.01% interest on it, and you can actually for that type of product, you can transfer it into a stocks and shares ISA with true potential, but also maintain the ISA wrapper that you've sort of held, so you don't lose any allowances. You can do, Greg will explain a little bit about that, but you can do it on the website, or you can get an advisor to do it. And that's just a really easy transition. I think, for us, you do need an element in cash to make sure that you have what we call our emergency fund. But above that, you should consider where you're getting your growth from your money. And as we can see, over a long-term period, which is what investing's for, you will see equities will outperform sort of that cash element. So it's important that you do look at that. I always say long-term investment. This gentleman I was talking to, the money was actually for his children. His kids are 4 and 5. It's set up for them for when they're 18 and 21. So he's got a long-term period, and they're sitting in a cash ISA getting very low growth for him. So that's been transferred across for him, and he'll hopefully see the benefits of Jeff's portfolios.
Well, I suppose the issue there as well, sitting in cash, you've got an inflation adjustment to make as well. So with inflation there, your real return is in all likelihood negative, given where rates have got to today. And yes, we all know that the inflation stats are coming down, given everything that's going on in the background. But even if you've got your interest rate at 0.1 of a percent and you've got inflation at 1%, well, there's a real loss on your cash that you've got in there. So looking for growth is clearly something that people should do, and think about where they can get that. I think the key thing around that is that we know that risk assets do offer you that higher potential for growth, because you're taking on increased risk, you're taking on increased volatility that goes with that. But that's a good thing. You have to take that opportunity to enhance your return. And I think the key thing to us, and the key thing to think about there, is how you do that through a diversified approach. And you think about diversification being at the heart of that. So exposing yourself to multitudes of factors that can enhance that return, be that equity risk, be it bond risk, or be it taking risk in alternatives. All of those things enhance the longer term return. And I think the other key thing to think about there from our approach is to think about the risk that each individual has. and that's mapped from when they come on to True Potential's platform. And so you were completely marrying the risk objective that they have, the longer term saving goal, with the product that they end up taking in terms of that risk profile. So all of those things come together to help our clients enhance their longer term opportunity to reach those targets that they've got, like the gentleman that you've just talked to Jamie, wanting something for his kids when they're 18 and 21.
Thanks, Jeff, Jamie. And Greg, there's probably a good chance to talk about the digital direct offer and how also clients can help themselves with transfers.
Yeah, absolutely. I think the gents have talked about all of the kind of end products and what you end up with, but how do you get there really, which is primarily through the client website. So within there, obviously, we talked about Impulse Save. That's fantastic for taking money out of the bank. So from your debit account or whatever it may be into an investment. But what if you don't already have something to top up, or what if you've got an investment with another provider? All through the client website, page by page, with sort of guidance and obviously the help with the customer care team along the way, is you can start buying your own products. So again, I'm like Dan, as he mentioned earlier, I like to do things on my own. I try not to pick the telephone up and speak to somebody, probably just because I'm a bit more acquisitive. I like, taking a bit of time to do things. My other half, Jenny, will tell anybody that it takes me about 6 weeks actually to make my mind up to do anything. So the most recent one was a golf club purchase that took me weeks and weeks of research online and watching tutorials and reading about it. And we know what other people like out there like you are like that. So the client website is really neat because you're logged in a secure environment, first of all. So once you're logged in, it is all encrypted and secure. You add the information of the policy that you've got already. You start to do some analysis of the product you're looking to buy, so the charges, the performances. Sort of Dan mentioned Jeff's commentary about how the team will be running your money, and once confident, you will execute the transfer. And that can be done both, self-execution by doing it yourself, or indeed through one of our financial advisors. So digital direct offer, which is the newest tool that we've added to our armory, allows you within 3 pages of sort of step by step to transfer your policy. Once you press transfer, the difference is we have a team at True Potential who will contact the provider your money's with. They'll do all of the chasing. They'll make sure that the funds settle, are invested, and then run in, Jeff and the team's portfolio. So we've designed the digital direct offer really be seamless, end to end, and we do all of the legwork, which is very important. We don't want you to initiate the transfer, then have to call up your, the other provider and ask them if they've received it. That's all done by an administration team here.
Thanks, Greg. And we'll stay on the cash side of things, really. And Jeff, we had a question on our Facebook, which was asking about, are cash levels in the portfolio being reduced overall, or do different managers have different approaches and different ways of either keeping cash or utilising cash?
Yeah. So I think it's important to say at the outset that all of our fund manager partners have complete autonomy as to how they run their underlying funds for ourselves. So they take all of the decisions within the portfolios as how to deploy cash and how to seek out opportunities. What we have seen over the course of the month is our managers reducing overall cash levels in the portfolios. Why is that? It goes back to one of our points that we're making previously, that volatility has declined, but also there's been opportunities there for them to take that opportunity and use that cash and deploy that cash in the market. So yes, overall cash levels, you will see when the fact sheets come out for this month that cash has declined across all of the product ranges. Portfolio managers are partners using that cash in the market. Some of those are for very stock-specific opportunities where our stock-specific managers have been able to see assets that are trading at a valuation that looks attractive, so the price has fallen. relative to the underlying value that they attribute to those. So we've seen some of our managers take advantage of that within the medical devices area, within other healthcare related areas. We've also seen some going more cyclical and looking at some of the mining companies and getting some exposure there. And then we've seen bits of rotation into investment grade credit that have touched on as well from some of the other managers. So each of them using their skill set, their investment process to identify where the opportunities are and deploying cash to take advantage of that.
Thank you, Greg. Jeff, even. So, yeah, you're welcome. But we'll have one last question today about the investment side of things, which is really one for you to kick off with again, please, Jeff, if you don't mind. But the question was, has the economic impact of coronavirus been over-exaggerated, given how investors have started to see their money bounce back?
Yeah, I think that's probably one of the big questions that everybody in sort of the market's asking themselves, and it's an unknown. None of us, I think this is the key thing that we all need to be aware of. As much as we would all like to be able to predict the future, and many market participants suggest that they can, that's clearly not the case. So what we don't know is we don't know what the economic environment is going to look like going forward, but we can have an idea. And we can use history as a guide. We can also look at what's happening in the economic environment as we've seen today. And what have we seen? Well, we've seen quite a bit of a V-shaped recovery in most of the sentiment indices. So the purchasing manager indices that we look at have all improved quite sharply. And it looks as if April will probably mark the low for economic activity, and we'll see an improvement from then. What that improvement looks like is something that we're just going to have to continue to monitor and see on a monthly basis. I don't think we can predict it 3, 6, 9 months ahead, but what can we say is that central banks and governments have taken a lot of action to provide support to the economies, and that will feed its way through, and that will feed its way through to improving economic environment, and we probably will see quite robust recoveries given how negative things have been done. But I think the trick there is not to just be thinking about the recovery from the bottom, i.e. things have recovered 30% month on month. Well, what you need to look at is what's happened year on year, and where the year on year change is to get a real sense of what's happening. So, I think it's a difficult one to say. I think it's an interesting one from an alphabet soup. If you think about what people are saying, is it a V-shaped recovery? U, W, T, even the square root sign has been thrown out there. So what does that tell you? Basically, it's a difficult decision for people to take. It's a difficult view, but economies do recover. And I think that's the thing that we have to be very aware of, that, it's not the end, and we continue to innovate and we continue to change, and things will recover from where they are today.
Thanks, Jeff. And I agree with that. I think as you say, it is alphabet soup out there. And as people better understand this virus, I think people also have to realise we're not out of it yet. We're in phase 2 in England. I'm not quite sure what phase you would be in just over the border or not, Jeff. But we're a long way out. We're talking about travel. With the quarantines now in place, we're talking about the concept of air bridges. We've been kicking around that. We've got the Greeks saying everybody's welcome in, apart from the Brits. But maybe you'll be allowed in July. Ditto really with the Spanish and things. So we don't know what some of these kind of, the economy's gonna look like. And I know we've got some other questions about, did the government get it wrong with excessive money being spent on furlough schemes, on Nightingale hospitals? And I think it's too early to say some of that at the moment. And it might be a better podcast for another day, I think, when we maybe involve David and everybody as well to talk about the overall approach there. So I just want the audience to know I've got those questions, but I'm going to park them for today, and I think we'll pick up on them, because I think it's a broader economic side of things as well as political from there. Just moving across to really on the session 3, really, which was some general questions. But before I get on to there, Jamie and Dianne, and indeed Greg, I know there's been different ways we've talked about how can clients get in touch with their advisors, or how can clients get in touch with True Potential, or what happens if clients, want to help themselves as well. So maybe the three of you could talk about, the technology we use, but also the phone systems, just to put everything in together to give clients the reassurance and the advice when they need it.
I think. Oh,
you go, Di.
Oh, thanks, Jamie. So from my point of view, the True Potential is accessible via all of the True Potential websites. So you can go on and there is a live chat button. Now that it doesn't make a difference whether you're a True Potential client or not at that point. There will be somebody there that will chat to you to talk through your questions and your needs. The button itself is actually labeled live chat. So when you click it, there'll be a little window that pops open, and if you've got a webcam, the user might ask whether you want to turn your webcam on and off. Regardless, there will be somebody at the other end that you can see that is there ready to answer your questions and guide you through. If you're logged in and you might have a query about your account or on the website, they'll guide you through that. If you're not logged in, then they'll try and ascertain what it is that you've come to True Potential for, and they'll guide you from that point of view. And that's regardless as to whether you have an advisor or not. Those features are still available to you as somebody that may be interested in True Potential or are currently invested in any of our funds. And that's available, like I did say, across all the websites. Yeah.
That's live chat.
It is.
Video as well, guys?
Yeah.
Sorry, Dan.
I think Dianne mentioned there just about the webcams. We also allow to have web chat. So similar to this, you can see our faces, you can chat to a member of the team and kind of use the optional webcam chat. It actually, when we first launched it, it was seldom used. I think you could count on one hand in a month how many times the webcam was shared, but more and more recently, because everyone's used to living this way really over a webcam. I've always sort of thought it's kind of, we need a reason to use this technology because it's always been there. FaceTime was probably the only one that was ever really talked about as being a way to do this, but there's lots of other sort of companies jumping on the back of it. But True Potential have had this sort of webcam sharing software for a long time now as well. But yes, more recently those numbers are going through the roof. For once I don't have the stat or the number. Sure, next time if I am asked that,
I may not be asked now.
Sacre
is anecdotally coming into the team. They're letting me know kind of, in their weekly reports and like, actually we're seeing a big rise in this. And one of the things that was commented on was actually, it's, good to see your cat jumping on your shoulder or the dog barking in the background, because actually in a way we're all in this together, client and, staff. So that's been a good one for us, I'd say.
No, I think it adds a bit of fun. I know, Greg, you've done a work from home video. I've done one as well. And I got a lot of personal comments about it. People were just quite interested in what was going on, what it looked like from the other side, so to speak. Jamie, the last bit of technology would be the screen sharing side of things.
I think I was just about to mention, Dan. I think it's worth saying from a customer care point of view, we run 300 to 400 online demonstrations a month for clients, and the idea for that is we are really keen that people can see what they have. So when for a client at True Potential, we want to ensure that they've got the apps on the phone. We want to ensure that they log into the websites and they can see the values of their investments, because actually this is a long-term objective. Typically for many clients, we want them to set goals, track their goals, and see the value of their investments every day if they wish to do so. So the part of that demonstration is, as you said, is we share screens with clients and we show them actually how to use the technology in terms of, this is how you access your investments. This is how you can see all the documentation. This is how you secure message the team or secure message your financial advisor. So that's really important piece of technology for us. And I think over the last 6 months, we've demonstrated that to 3,000-4,000 clients, and we continue to do so. It's very important to us. So if you are looking, if you want a little bit more insight into your website, give the team a call or speak to your financial advisor, and we'll show you a little bit more, because being engaged with that piece of technology will help you when you're looking at that financial goal that you have.
Thanks, Steve. And last couple of questions for today was, if we move on to a general update, one of our clients was asking about how do we choose the charities which we support. So I think I mentioned last time I was on about the work we've done with St. Cuthbert's. I think we shared one of the staff videos where the staff did a fundraise, and the final figure we got to there was £5,000. And just last weekend, the 30th and the 31st of May, that £5,000 paid for 2 full days of care at St. Cuthbert's Hospice. Why did we choose St. Cuthbert's Hospice? Couple of reasons, really. Well, many reasons. Obviously, there's a heck of a lot of good causes out there, and actually one of our biggest challenges at True Potential is to pick which cause can be the worthiest that month. But one of the reasons we picked St. Cuthbert's was it's a local. It's based in Durham, which is just down the road from us. In fact, it's where, say, Jamie, you live in Durham. Greg, you're from near there originally, not closer to Sunderland maybe than Durham, but
Don't say that.
But it is a local charity. Michael Conley, who's a member of one of Jamie's call team, his mum is part of the care team there as well. And the final part is really linked to some of the work we do with the C19 Business Pledge, which is we're not just kind of writing blank checks and saying we give some money to whatever. It's all about C19. It's about working with your communities as well. And certainly, if you look at what a hospice does, it provides such an important, horrible at times, but very important bit of work to the community side of things. So that's why we picked a cause like St. Cuthbert's. And it was a pleasure to be able to see the staff, have such involvement with the fundraising. And Greg, I don't know if you were involved with any of the fundraising, or did you make Jenny do any of it?
I took part. I actually, for once, was behind the scenes and gave Esther a bit of hand in coordinating and working with the team. But I think probably worth noting Esther McCausland and some of the fantastic work she does kind of behind the scenes and organising it. But five days of just carnage, really. People doing, push-ups and, running challenges and step challenges and things like that. So it was a great effort from everybody. But I think what it also done it really did boost the morale, because we brought as many people in the team into the picture. So it wasn't just, the usual put a couple of pounds in the bucket and I've done my bit. It was getting people to think, actually, we are fortunate that we're able to be in a position where we're able to continue to work from home, where we're able to continue to be paid. We're in a very fortunate position as True Potential staff. And then I think it actually allowed everyone to realise that, spending 5-10 minutes looking silly, really. So I know someone dressed up as Batman, and actually the final cut that we put on YouTube, I know, was heavily edited.
Very, very heavily edited, yeah.
There's a lot of things that could make the final cut, but it was a great bit of fun. And I know, as I say, well done Esther and the marketing team for putting together just such a good kind of, a good show, really. And it was good for us all to watch it on our update meeting as well. And actually be able to laugh at each other.
Yeah, no, I mean, laughing at each other is important, actually. It's something we do a lot at Potential. I think you probably get a glimpse of it on these podcasts as well. But this is us in our best behaviour.
It really is.
You try in the office with us, ladies and gentlemen. And I think if you think of some of the other causes which we helped, so last month's other supporter charity was Steve Hutton. Steve Hutton ran 100 kilometres over the space of a month for motor neuron disease as well. So Steve Hutton has been on these podcasts before. He's a chief executive at Wealth Management as well. He had friends and family who'd been affected by motor neuron. So we wanted to get behind Steve. And I think one of these big things in lockdown at the minute is challenges. So, Steve set the challenge. We supported him in that way, in the right way. And then talking about challenges, this month's charity, June, is Gateshead Football Club. So again, a community-based local team. I don't know what league they're playing, Greg or Jamie. I don't know.
National League.
National League.
I think with Gateshead as well, the good thing with that is many years ago I actually played for their reserve team as a footballer, and what a lot of people don't realise with some of the smaller sort of clubs like Gateshead is the work that they do in the community. So Gateshead, obviously, as a football club, they've got a fantastic international stadium. It's the running track where they hold a lot of the athletics and the like, but they actually behind the scenes do a lot of charity work and a lot of sort of unseen work. So I think for me, that's a lot of people have all sort of came to me and said, why are we back in a football club? There's much bigger things going on in the world. But actually, the work they do in their community, I'd see a big dent. It's not just the sort of following of the 11 men kicking a football.
It's everything else.
There's stuff behind it.
And again, that's something that's going to be really important at the minute when we're looking at kind of community, we're looking at education, we're looking at participation. With schools and things being closed down, the involvement of these wider community pieces is so vital for children to get out, to learn, to participate as well. And Steve Thornton, who works with Dianne, we call him Storm and Norman at times. We call him Sweary Steve, lots of things. Is it tomorrow? He's a trustee of Gateshead FC. Is it tomorrow he's shaving his head, Dianne?
He is. He absolutely is. It's all coming off. And I don't know what he's going to do, because if anything looks like it's wrong, the first thing he does is put his hands up to his head and he's like, oh, no. And then, like, Steve, you're not going to have it. He's like, I don't care. It's a good cause. I'm doing it.
Yeah.
Good for you.
Is there a live video?
Yes, there is. It's going to be on Facebook. It's going to be streamed.
Live stream, Jamie, on Facebook. So
Yeah.
we'll all repost it on our.
We'll repost it, but I mean, maybe Graham's the behind the scenes our director for one of the posher terms. But Graham, maybe if you get a chance to pop the link into here as well, so people can have a good laugh at Sweary Steve getting his hair shaved off.
I did forewarn him. I did say, Steve, because it is long now. It is really long, his hair. I did say, Steve, you're going to have to cut that, because if you go straight in with a set of head clippers, it will just rip you. He was like, oh, I'm pleased you said die, because I didn't know that. Now I'm thinking, should I have told him, or should I just have left that line? Not to worry.
And I've got awful memories of just, Greg, when you were mentioning that Gateshead Stadium. I once had to run the 400 metres for the school, but it was at the last minute. The normal 400 metre runner dropped out. They made me run it, and I remember spewing up on that track. My legs for the last 50 metres just went. I just remember dropping over the line. Came third, though, got a medal. So, third.
Bring it in, Dan, let us see.
3 in the race.
3 in the race. I think that's a good place to wrap it up, I think.
Spewing on the finish line. Lovely.
So it's looking a bit sunny at the moment outside. I'm just looking out the window. But it's due to rain again. And I think, Dianne, I was going to ask what are people looking on the weekend, but I think it's going to rain. It's your fault, apparently.
It is. It's my birthday on Sunday, so hello clouds and hello rain. Yeah, but yeah, and well, I'm on holiday today, so I will be having a few drinks later on if the rain stays off in the garden, because I was supposed to be seeing Pet Shop Boys tonight again. That's probably not something I should say on the internet, but they cancelled their concert, and then yes, my best friend's coming around to have a couple of birthday celebratory drinks, and then I might spend tomorrow feeling a bit like you at the finish line, Dan.
That's it. Yeah, and well, just make sure you socially distance like me and Mr. Greg.
No problem.
Yeah, with that. It's my birthday tomorrow as well, Dianne. It's exciting. And as Greg keeps asking me at the minute, no, I'm not 40, I'm 39.
All right.
I'm hanging on in there. So it's I'm not quite there. So my weekend will involve me being in a bad mood because it's my birthday. That's as good as it gets. Jamie?
You've been 39 for a while, Dan, actually. That's
hey.
You don't live far away from where I am.
No, I'm on, well, Annie, my wife, hinted at decorating duties this weekend, which I'm going to try and get out of. But it looks like that's what I'll be doing.
The top tip with decoration, Jamie, is make a mess of the first wall. Then just never get asked. That's my top tip. Anyway.
I hope she doesn't watch this video and then realises what I'm doing now, Dan.
If Annie's anything like Gemma, Gemma just says, "I'm not watching you lot on that."
I speak to you every day. I get it all the time.
Because every week I say, "Oh, I did a really good podcast today. Are you going to watch?" You say, "No."
Thanks for the support, love.
Yeah. And Jeff, you mentioned you're off next week.
Yep. So I've got a bit of time off. The boys have got their half term from school next week. So there is speculation that we might put a tent up in the garden to have a bit of a camp in the garden to give them something different. So that's what we'll probably be doing, and try and get outside and get a few walks in. Maybe even get out on the bike for it again. So that would be good.
So next time we see you, Jeff, you'll have the cool from having spent the night in the tent.
I'm not looking forward to it. It might be me that'll come back into the house and the boys will stay out in the tent.
That's what I would do, mate. And Greg, are you golfing with your new golf club?
Golf tomorrow for me. Unfortunately, the driving ranges are all closed, so I'm just going around golf courses at the moment, using it as if it was a driving range, and pretty much spend no time on the fairway and all my time in the rough looking for lost balls. But just a hobby I've picked up, really, being able to get out, go walking. Pretty much golf spoils a good walk, in my opinion. So this is the main excuse to do different walks around different golf courses.
And Jenny will be delighted to have you in the house.
Yes, right. She's getting used to it. Happy with me being in the office and her at home, and then weekends just sending us off out for fun. Asking me if we've not tried that golf course that's even further away from home, just to get us out for longer. My question was going to be, Jamie, decorating. I've never met a more clumsy man in all my life. So just for those of you that probably don't know Jamie as well as we do, there's going to be paint pots spilled on the carpet. There's going to be, wallpaper paste everywhere. The house is going to fall down. It's going to be great.
No ladders for Jamie. No. Don't go by the ladders, Jamie.
No, actually, I did have a set of ladders, but my dad actually took them off us for that exact reason. I'm not even joking there. So,
well, on this very podcast, we've heard about your dad and ladders and things.
I'm looking forward to seeing the before and after pictures being the wrong way around.
Yeah.
Or they'll be the same. There'll be no before and after. It'll just be current.
Yeah.
As you know, I've obviously got a little one on the way, and I've been told that I'm not allowed to put any baby furniture up for that exact reason.
I'm the same. I get a man in, as it would say.
Oh, you lot. Honestly. There's July's challenge coming right up. Yeah. IKEA's open now. There'll be flat pack furniture everywhere for you all to put together.
Well, you can go to IKEA now and queue up for 3 hours like a moron.
Yeah.
So that could be your weekend, Jamie. IKEA instead of decorating.
Definitely not.
No, you could go to McDonald's on the way back, so you queue for 3 hours to get to McDonald's.
Get you out of the house.
That's true.
Good. Well, everybody, thank you so much for today. Jeff, Dianne, Jamie, and Greg. Lovely to have you all on the podcast. Thanks for the input. Lovely to sit next to a person. So hopefully I'll see you three physically at some stage as well. But ladies and gentlemen as well, thank you very much for all of the great questions. We've covered a lot of them. Apologies we haven't covered all of them. As I mentioned, we will pick up in further podcasts as we progress. But I'll say goodbye now. Everyone have a lovely weekend and see you all next week, I hope. Thanks. Bye-bye.
Thank you, everyone.
Goodbye. Thank you.